Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, it's the 2nd of November. My name is Russell Shaw, and I am a senior market specialist at FXCM. Just want to draw your attention to my email address, rshaw@fxcm.com. And of course, if you need to correspond, that is the email address that you should be using. Just going to go ahead and bring up our disclaimers. Let's start off with the high risk investment warning. I'll keep this on screen for a few moments. Hey Mia, good morning to you. Raj, Kim, pleasure to have you on the webinar as always. Thank you everyone for signing in this morning. It is highly appreciated. All right, let's just bring up our market commentaries disclaimer. Hey James, good morning to you. Welcome as always. And our references MarketScope 2.0 and TradingView.com. All right, let's go through to TradingView.com. Let's just do some analysis on the real yield. I think there's some information for us there. What we've been looking at is the failure swing. The failure swing is effectively a peak and trough analysis of the RSI. So what we had here was we had the peak. We have the reference peak over there. What we've got here is the reference trough. And then what we pointed out was that there was a lower peak followed by a lower trough, and generally the failure swings are quite powerful signals of trend reversals. They take place at the overbought or the oversold part of the indicator if you're looking for a reversal from the upside or a reversal from the downside. So here we're looking for a reversal from the upside, all right? So this is what we call a failure swing. And it's never used in isolation. It's a clue. So what we want to see is we want to see other technical signals which suggest that the failure swing has some sort of substance to it. And it's Thursday. We've got today and tomorrow. What I think we need to do is watch the real yield. It looks like we're getting a reference candle here. Will it close as a reference candle or not is the question. The reference candle will be over here. It's in at least 3 candles. And then it looks as if it's going to close below the reference candle. Okay, it looks like it's going to close below that reference candle's low, I beg your pardon. And that to me is an extra sort of check in the box that we are at rates, potentially at peak rates. Now, yesterday the Federal Reserve didn't raise, they didn't hike, they kept rates in check, they kept them stable, and by and large, it does seem to be perhaps less hawkish, or that the rhetoric is, I mean, they have kept the door open for higher rates, and I think they have to. They data dependent, but we have seen inflation come down. We have got tighter financial conditions because of higher yields, and effectively, it does seem as if the tighter monetary policy seems to be working. So the idea here is we may be at the apex of the rate cycle, and if that is the case, we want to keep an eye on the real rates, because the real rates seem to have a relationship with the financial instruments that we trade. And if we're getting a top in the real rate, well, that's noteworthy. That's something that we have to take note of and see how it's going to affect the other instruments, so that we can try and position ourselves correctly. All right. So what we can do here is keep an eye on the real rate, see if we've got this reference candle reversal. We've got this failure swing. What's interesting is when we take a look at the real rate, and let's just take a look at the correlation with the US dollar as our next part of analysis. So let's take the RSI out here. And what we're going to do is we're going to add the US dollar underneath. So just click on that plus sign. The US dollar will add as a new pane. Okay, and then I think it's worth our while that we add a correlation coefficient. So we just go through to indicators, type in the correlation coefficient. We're looking at it on the weekly scale. All right, just make sure the symbol that we put in here is US dollar. And what we can see, let's put in a label here as well. So we can see the current, that's not the right label, the value. You can see that the correlation coefficient is a very strong 91%. In other words, the dollar as it's currently moving is very closely aligned with the real rate. In other words, you can see here the real rate moved up. Here the US dollar moved up. Now we're starting to get a sideways movement. In other words, remember the core question, the key question we've asked is, well, how much higher can rates go? And it seems we've kind of stabilized. Well, that seems to be reflected in the dollar market. Dollar market seeming to stabilize as well. And Raj writing here that you know, we're potentially heading into a risk-on environment, and we'll take a look at that with the analysis slowly playing out. The idea here is if we're going to get some sort of movement down in the real rate, I'm not sure we're going to get that movement down. We need to get the reference candle locked in. The next thing would need to see a crossover in the moving averages, and that all are extra signals on top of that failure swing, right? Then we would want to see the US dollar move if the correlation is going to remain as tight as it is. It's at 91%, incredibly tight correlation. So we've been watching this real rate keenly. I think it's starting to pay some dividends, and we can see that it does seem as if the real rate now is starting to come down in response to perhaps a message. Look, it was a hawkish hold. There's no denying that. The Fed has kept the door open for further hikes, but I'm of the opinion it was less hawkish. The rhetoric that came through, the rhetoric that came through, seemed to be less forceful, less hawkish, and they are approaching each meeting individually, data dependency with each meeting. So, and in fact, the market expects the December meeting to hold as well. So that they don't expect a rate hike in December, and that's quite interesting because if you go back to the previous dot plots, the dot plots suggested one more hike for this year. The market's saying no, I think we're done. We're done for this year. Of course, January remains open, but we'll obviously tackle that as we get closer to it. Let's go ahead, bring up the US dollar chart on MarketScope, and what we'll do is carry on the analysis using the MarketScope trading platform. So let's just bring that across. Here we go. All right, so what we can see here is that we've got the sideways movement. What would be interesting, let's just take this rectangle out. What would be interesting here would be a reference candle in the US dollar, so something like this. So I closed below last week's low. I think that would be quite substantial. Let me just try to get this as straight as possible. There we go. I'm going to leave it as that. And if we go down to the daily chart, you can actually see that the dollar has dropped here. It's dropped from zone 1 and it's pushed down into zone 2. So a movement from zone 1 down into zone 2, well, that's relative. So the dollar has effectively dropped down as we start this day. And that, again, just to, yes, hawkish hold, albeit, my opinion, less hawkish. Okay, so you can see the dollar dropping down from zone 1 into zone 2. There's no real trend here. We're kind of moving sideways, and that's why we're in zone 2, but the relative movement is down. You can see that the RSI has dipped below 50. Let's just take a look at the hourly chart. You can do a reference candle on the daily chart. So that question from Kim. You can do that. You can do a reference candle analysis on any time frame. The higher the time frame, the more powerful the signal. Okay, the higher the time frame, the more powerful the signal. So you would have a reference candle yesterday, and then we would need to wait till the end of today to see if today's candle closes below yesterday's low. So yes, the answer to your question there, Kim, is absolutely. You can do a reference candle on any time frame. Just the higher the time frame, the more potent the signal. What we want to do now is go down to the hourly chart, and you can see that the dollar really has come down overnight, and it's hit this S2 level. The S2 level is acting as support, but you can see that we are at the lower end of the stochastic. So there certainly seems to be some sort of a bearish pressure here. What I would watch is the S1 level. So watch for some sort of movement up. If it goes above the S1, just watch for the reactions and see if there is some sort of opportunity to short into the rally. Now, if that's the way the market's going to go, okay, because we don't know, that's why we watch the signals, we watch the EMAs, we watch the stochastic, then I would go back to what Raj wrote earlier in saying that it does look as if we're getting some sort of risk on play here. Let's just take a look at the DAX to see how the DAX is positioning. We've got 5 minutes until the cash open on the DAX side, and then we'll take a look at some other instruments, but let's just see how the DAX is looking to set up. All right, so we'll start off, and the weekly chart has been quite abysmal, hasn't it? You can just see that we've got this lower peak, we've got this lower trough. There's the downtrend, but you can see, moreover, you can see we're below that black 30-week exponential moving average, that exponential moving average pointing up. But we've got a very strong blue candle for this week. If we go through to the daily chart, we have crossed upwards into zone 2 from zone 3, so a relative strength movement. Now, we've got to be very careful with the risk markets. I would like to suggest that if we are at the apex of the rate cycle, then perhaps we're at the bottom of quite a vicious pullback in the risk markets. But I'm unsure if that's the case. So we've got to monitor this on a day-by-day basis. What would really be a positive development is if we could just get above this green downtrend line. If we can get above that green downtrend line, then the downwards momentum is slowing, the downwards momentum is waning, and we would want to see the DAX get above its 30-week exponential moving average, and we'd want to get that 30-week exponential moving average starting to push up as well. So we're not out of the woods yet. Okay, it does seem to me as if we're starting the day risk on. I'm hoping that we're pretty close to the bottom here, but we have to monitor this on a day-by-day basis. Okay, monitor the data, because that's exactly what the Fed's doing. It's monitoring the data, and it's going into each meeting individually. Okay, no conceived notions. So we do have this movement from zone 3 to zone 2. So it does look, Raj, as if there is some sort of relative strength going on here. And if you take a look at that RSI, it's popping above 50. So on a daily chart, it does seem as if the Fed meeting is carrying through to a risk-on type of move. Let's go down to the hourly chart here. And really, the market started setting up for a risk-on move yesterday. Perhaps we can take a look at it like this: 1, 2, 2, 3, and potentially setting up for the next 1, 2. We'll know in the next 1.5 minutes or so. That's when the cash market opens. Remember, when the cash market opens, there's going to be a lot of limit orders that are filling, a lot of ARs that kick in, so it takes like some time. It takes a bit of time for the market to settle. You can see that the stochastic is in this 80 plus area, and what I would suggest, the longer we maintain in this 80 plus area, the better it is for the DAX, the more the sentiment will lean to risk on. Right, so that's interesting. If we take a look at the Nasdaq, we can see. I just want to show you the Nasdaq on the weekly. This is looking quite interesting. I think that we need to take also a lot of our cues from the Nasdaq. It's definitely sort of a leading index at the moment. AI is really sort of the catalyst that's running the market. We can draw in our down trend line and see if we can get above this down trend line here. We've already moved above the 30-week exponential moving average, and that moving average starting to move upwards. So perhaps some sort of bullish coming through on the Nasdaq. Take a look at it on a daily chart. Yeah, it's moved from zone 3 to zone 2, so some sort of relative strength. And you can see the RSI here starting to pop 50 as well. And then if you just take a look at the hourly chart, okay, perhaps we're getting some momentum push over here as well. The longer it stays in that upper quintile, the better it's going to be from a risk on perspective. Okay, then James just writing BOE is on today, so we'll just go through to the pound US dollar. Quite right, we've the Bank of England that's on today. The market expects interest at the official bank rate to hold at 5.25%. The BOE is going to be at 2 p.m. ZA, which is going to be 12 p.m. UK. 30 minutes later, we're going to have Governor Bailey, Andrew Bailey, delivering his comments. So just be aware of that. The idea here with the cable pairing, it's not quite as responsive as we would like. It's also moving in the sideways pattern as the dollar is. If we had some sort of reference candle here, so something where the price takes out last week's high, I think that would be doing a lot in terms of making a statement. It's just sitting in zone 2. Okay, it's just sort of moving lackadaisically, so to speak. across. Let's just take a look at Euro just as a last chart for this morning. And just waiting for that to come up. Bear with me a moment. Okay. Okay, a little bit of a longer candle. Not quite as spectacular as we would want as traders. It's yesterday's candle is what we call a dragonfly doji. There is some follow through. It is in zone 2, perhaps looking to get into zone 3. There's a little bit of positivity with the RSI coming above 50. And if you just take a look at your stochastic here, it's moved into the upper quintile. So again, just to really finish off, we're getting our main cue from the real rate. Real rate's coming down. That suggests to me dollar potentially coming down. With the majors, euro seems to be lifting up. Cable, not quite as obvious as sort of the euro, but we do have Bank of England today. And it does seem, we'll just go through to DAX just to see how it's opened. It does seem that the market perhaps tilting towards a risk on move today. And you can see that we have opened up with a blue candle. The longer that the DAX stays in its upper quintile, the better it is going to be from a risk on perspective. Okay. Friday I'm going to be off, Raj. So the morning session for Friday is also going to be off. I'm taking Friday off, going away for the weekend. So just bear in mind that today will be the last webinar for this week. We'll kick off again on Monday. All right, guys, that's where we'll wrap up for today. Thank you very much for joining me this morning. Much appreciated. Have a great day ahead, a great weekend ahead, and we shall chat on Monday. Cheers, guys.